Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which has just approached a quite significant level of monthly demand and support. In fact, exactly from here, all this previous rejection to the upside was created, and at the moment the market has approached exactly this same area from which there is the possibility to see a potential rejection to the upside. We can also notice that in approaching this quite strong monthly demand and support, the market has also just created an M pattern. And in general, after the creation of an M pattern, what we would usually expect is for the market to create a rejection to the upside to go and complete the pattern at the previous support turned resistance. So here on the monthly, we could expect a potential reversal to the upside for the completion of this M pattern at the neckline, which is this previous support turned resistance here from a monthly standpoint. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, we can see even more clearly how this is a quite strong institutional longing area from which we had a massive move to the upside. As we are approaching the same zone, there is a very high probability that we will see new institutional longing inside of this area. At that point, further increasing the probabilities of a potential reversal away from this zone. We can also notice how in creating this move to the downside here from a weekly perspective, the market has in fact created this overextended M pattern. Now, in general, after the creation of an overextended M pattern, what you would expect is for the market to provide a correction to the upside, at least to the 0.32 of the Fibonacci taken on the impulse leg. Now, in this case, the impulse leg is from this high to this low. So in a situation like this, what we would expect is for the market to provide a potential correction to this 0.32 of the Fibonacci taken on the weekly impulse leg as a first upside target. So at least for now, by looking at the monthly and weekly time frame, what seems very likely is to see some accumulation happening from an institutional standpoint inside of this zone, and then to see a rejection to the upside away from this area. Now, if we drop down on the daily time frame, what do we see? Now, here on the daily, we can already see how the market is starting to create a deceleration in approaching this support. We had a massive impulse to the downside with candles showing strong volume. So clearly, in this move to the downside, we had essentially sellers in control. However, now we start to see how sellers are losing their control, and we can see how the candles are getting smaller and smaller. When you see a situation like this, you would expect the market to create a rejection to the upside away from the level after seeing some proper buying from an institutional standpoint inside of this zone. Now, speaking about institutional buying, if we go and see what we have when it comes to the commitment of traders, up to the last report, we weren't seeing any kind of strong institutional buying. In the long run, we were getting a slight increase of the net positions. We went from 101k net positions up to 115k net positions. So we can see how institutions have started decreasing their shorts that went from 124k to 119k and increasing their longs that went from 226K to 235K. So from an institutional perspective, at the moment we have 230,000 longs and 119,000 shorts. So we still have way more longs than shorts. However, there's a very high probability that with the new report, which is coming out tomorrow, essentially we will see new institutional longing inside of this zone. So more longs added and more increase of the net positions as we have approached this support area. If that will be the case, that could definitely trigger a potential reversal to the upside away from this zone, at that point completing those monthly and weekly patterns that we have just identified. Now, from a daily perspective, our first upside target would be the 0.32 of the Fibonacci taken on the impulse leg, so essentially from this high to this low, and we can see that at the moment is here. This would be the first potential upside target in a case of a reversal away from this support. So if we will see institutional buying inside of this zone, how we could be approaching this potential reversal higher away from this area. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete those patterns that we have previously identified on the monthly and weekly timeframes. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is also linked in the description. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And if you scroll lower, you will see that at the moment the time to join with the special promotion is almost over, so I really suggest to go and check it out as soon as possible. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So I really suggest to go and check it out as soon as possible. The link is also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.